A year-end rally in equities is gaining traction as investors look ahead to further gains in 2026, even as trading volumes thin in the holiday-shortened week. At the market open, the S&P 500 rose 0.5% to 6,870.10, building on Friday's 0.9% advance, the index's strongest session in nearly a month. Nasdaq 100 added 0.7%, extending last week's rebound in technology shares. Dow Jones Industrial Average jumped about 0.5%. Looking ahead, handful of U.S. data releases are due, including a delayed third-quarter GDP report later today, though it is backward-looking and reflects conditions before the government shutdown. More attention is likely to fall on December consumer confidence data from the Conference Board, particularly after sentiment weakened in November to its lowest level since the turmoil around Liberation Day in April. Beyond that, the calendar offers few notable catalysts. Tech stocks in focus amid renewed AI optimism. Wall Street ended last week on an uneven footing. The benchmark S&P 500 finished up about 0.1%, while the Nasdaq Composite rose roughly 0.5%, helped by a recovery in heavyweight technology and semiconductor stocks. The Dow Jones Industrial Average, however, fell around 0.7% over the week. Trading conditions are expected to be subdued in the days ahead as U.S. markets move into a holiday-shortened schedule. Wall Street will close early on Wednesday and remain shut on Thursday for Christmas Day, a factor that typically dampens volumes and can exaggerate price swings. Technology stocks were in focus last week after chipmaker Micron Technology, Nasdaq, MU, issued a strong forecast, rekindling enthusiasm for AI-related shares. The outlook helped restore confidence in a sector that had recently faced pressure over stretched valuations, heavy funding needs, and concerns about whether demand growth could justify elevated prices. Oracle Corporation, NYSE, ORCL, shares jumped last week after reports that TikTok had agreed to sell its U.S. operations to a new joint venture, with Oracle expected to play a key role in providing cloud and data infrastructure services. The news lifted Oracle and added momentum to gains across large-cap technology stocks. The rebound reflected continued confidence that demand for advanced chips remains strong, even as scrutiny of the sector's valuations persists. Fed cut bet support sentiment. Broader market moves were further supported by last week's U.S. inflation data. A surprisingly soft consumer price index reading reinforced expectations that the Federal Reserve could move more quickly to cut interest rates in 2026. The data helped push U.S. Treasury yields lower, offering an additional tailwind to stocks. If the unemployment rate continues to edge higher, we think the Fed will respond by pushing its policy rate lower. If not, cuts from the Fed in 2026 will come later, only after it becomes clear that inflation pressures are receding, Morgan Stanley economist Michael Gapin said in a note. Investors were also watching developments around the Fed's leadership transition for fresh clues on the policy outlook. With current Fed Chair Jerome Powell's term set to end in May and President Donald Trump conducting interviews with several finalists, markets are parsing comments on interest rates and monetary strategy.